Hi, I'm Steve Spencer. I'm a partner at SMB Capital, a proprietary trading firm in New York City where we trade stocks, futures, and options. And today, I wanted to give you a little bit of insight as short-term traders, how we try to take advantage of market pullbacks. And so what I did was I grabbed a clip from this morning's morning meeting. At the beginning of those morning meetings, what we do is we discuss bigger picture, what's going on in the market, and I kind of outlined a strategy to take advantage if the market would pull back today. And so we kind of walk you through some possibilities there. One thing to understand is that short-term traders, our job is to take advantage of movements in both directions. I'm not making an overall call that the market should be much higher than here or should be much lower than here, or I'm predicting some sort of crash. But what I understand, having now been trading for over 2 decades, the risk to reward for larger market moves improve after the market becomes extended and starts to behave in a certain way, and you can put on good risk reward trades. And so that's all we were trying to do in the morning meeting today. I can't recall if in the clip I talk much about the approach in terms of how we would put options on this trade, but what I'll tell you is I definitely talk about kind of the levels that we're using and how we're using a gap lower in the market, kind of what you'd want to see, and potentially the size of the pullback that we could see today or over the next couple of days. But one thing to keep in mind is when you're in a very strong market like this, and it's begin to top out and there's no fear, is not only can you look to short at a key level on the SPYs, but you can also look to buy puts a couple of dollars, $2, $3 below where we're trading, because they're going to be really cheap because there's complacency, there's no fear. And so that's what we did. We put on a SPY short. We bought some puts for today, the 310 SPYs. We came in actually with the 308s. And so my thought was we failed above 311, we roll over, we come back down to 310, 309, we'll make some money today on that pullback, and we still have the 308s in our back pocket for the end of the week. And that's kind of was our approach. If you want to find out more about how we develop our morning game plan and our morning meetings, check out traderworkshop.com. Enjoy the clip from today's morning meeting. So they smacked the market yesterday morning down, not even down to 311. But we're gapping below 311 now. So this is when a market's like moved higher like this and just grinding, no one's scared, and buyers are in complete control. What you want is a situation like this where you have very well-defined recent support and you're gapping below it. There's actually no better scenario to put on a low-risk trade for a pullback. And the idea is when you do that, you're not predicting the market's going back down to 306 or 307, but you're saying, hey, we topped out,
CEO
extended,
initial dosing the phase 1 trial.
We're now below where the market was being supported. We're seeing some, I guess we see a little negative headlines every day, but it was the 1-2. The Senate, it's a big deal when the Senate, passes, I don't know if it was unanimous, but basically condemns China and Hong Kong. First of all, it puts political pressure on Trump, who's trying to get the trade deal done. He had his little dopey tweet, I think it was yesterday, where he said we're going to raise tariffs, which normally the market would shake something like that off. But you put it at the same time as the Senate passing their rebuke to China, you could get a little bit of nervous up at the 310 plus area. And so what you look for in this case is, well, where people were probably shorting it here earlier in the pre-market, which is right against the prior support around 311.15, 311.20. And what you need is like a move closer to 310 to cover your risk. You cover your risk, and then you kind of see what happens. You take your hands off the wheel. The first move is down. You just got to try to short into here against this. $310.60. $310.60 starts to form a downtrend, and we'll see. And if it's the beginning of something bigger, we zoom out. We just go back to the last consolidation range, which was, I guess, 309.5. That's pretty, that's decent downside. 13 to 9.5 in a day, $3.5. And then if it's one of those things that gets crazy, then it goes all the way to the bottom of the consolidation. We haven't had one of those in a while. All right, I'll go to the daily and we'll see when the last one was. Spit it out, E-signal. There you go. So I guess when we failed at that 302, we went from 299.5 to 294.5. So $5 intraday. So that could, that would be like in the 307 to 308 area.